I mean, these are pretty splendid numbers, and we've had a little bit more of a breakdown on the detail between the upstream and the downstream this morning. Take us through the top lines, Paul.
Yeah, it really was a bumper set of earnings for Aramco, thanks mainly to higher oil prices and production. As expected, the upstream arm continues to do extremely well. Saudi Arabia eased a lot of its OPEC Plus cuts in the second quarter, and with crude prices being higher, that translated into a very good set of numbers for the upstream arm. Interestingly, the downstream arm did well. It made a profit of about $4 billion in the quarter, but not as good as the second quarter. So for the downstream arm, margins are shrinking, and it's also being affected by supply chain woes, which is putting up prices for things like energy. Higher energy prices are obviously good for the upstream arm, but not necessarily good for the downstream unit.
And it's interesting how, all of the companies have huge capex plans going into 2022, and to what extent can they do that, and will that cause a further constriction in the market in terms of supply? Because Saudi has an ambitious target up to 13 million barrels. They went for paying down the debt rather than upping the dividend. How did that play out?
Yeah, they did. So their gearing is now down to 17%. It's still above their preferred target of 5 to 15%. It will be interesting to see what investors think of this, of Aramco keeping the dividend at $75 billion. Obviously, on paper, that looks massive and it's the world's biggest. But if you look at the yield, it's lower than the likes of BP and Shell and Chevron and Exxon. So it's not really that attractive a stock to foreign investors especially.